Hello there, Chevron employees, and welcome. Thank you so much for being with us today. I'm Sam, and I will be moderating this presentation for you. In just a second, we will be joined by Wesley Boudreau. We're just going to wait for a couple other people to trickle in very quickly. But before Wesley comes on, I would like to just quickly remind you that we are not affiliated nor endorsed whatsoever by Chevron. We are a completely independent group of financial advisors here, so please keep that in mind as you're listening along today. Second, I apologize in advance. Wesley will not have time today to answer any of your questions, but I encourage you to still ask away. It is completely anonymous, and I'll make sure either Wesley himself or another one of our Chevron-focused financial advisors can reach out to you after the presentation has ended, either through phone or email, to answer those questions or address those concerns with you directly. And lastly, while Wesley's speaking, you will see some links popping up on top of his head there. They'll be right up there. Those will be from me, and they're going to guide you to various resources we have available. You can click right on them. They'll guide you to our calendar where you can book a free 15-minute consultation with one of our financial advisors. You can also follow us on YouTube and LinkedIn. We post tons of Chevron-related content every week, and we really think that you would get some value out of it if you considered giving us a follow. And with all of that out of the way, we're going to jump right into it with Wesley Boudreau.
All right, man. Thank everybody for joining us today for this really quick just web meeting, kind of going over some of the different questions we've been getting recently from Chevron employees, especially surrounding the EOI, the expression of interest, whether or not you're looking to leave the company during this transition process that's going on, and then how some of these different items can affect your specific selection process as you move forward. We'll get into some of those questions. We've kind of trimmed it down to 4 different questions. Obviously, this does not mean it's going to cover every question we're getting. We're getting quite a few questions. We've been through a couple different ROMs in the past, so we're very aware of this process, how it works, and what to be expected. So any questions you have we don't cover today, feel free to give us a call. We'll be happy to get into that with you. So let's get into some of these questions. One of the first ones that we've been getting recently quite a bit is how late can I make my pension election? So let's pretend somebody maybe did raise their hand and they've got a date of July 1st, for instance. That's not that far around the corner. So the question is, okay, do I have to take my pension immediately? Can I defer it? How late can I wait to make my decision? So the answer is kind of yes to all those different items. It's all going to depend upon what you're looking to do. And it's really best to sit down with one of our advisors, kind of run through a cash flow analysis to find out what you're trying to achieve and what the best option is for you, because based upon your age, years of service, different items like that could affect what you're actually getting and when the best time it is to actually pull that trigger, and how long you have to make those elections. But generally speaking, as far as the question is how late can I make them, you can make them as late as you want. You can actually make them post-retirement if you want to. Obviously, what happens is typically Chevron wants you to make that election within 60 to 90 days of your termination or separation date. That way they can get all the ducks in a row, get everything situated, so they can get that check out to you pretty quickly, whether it be a lump sum check or whether it be a monthly annuity check. You want to get that rolling as soon as you do retire. But if you do wait later, closer to retirement, then you're still going to be able to get the right date, get the commencement date you want, but it may take a little bit longer for that check. Or you may retire and still be kind of in a whirlwind, wondering what am I doing right now, and you may not make a decision for a couple months later. You can still do that as well. One caveat there is, everything's based upon age 65. So if you're older than 65, it's probably going to behoove you to actually get that done as soon as possible from retirement. You may get some additional interest credits, but nothing that's going to be beneficial to actually wait beyond 65. So again, I guess a call. We can look at your specific situation. But if you're taking the lump sum, in some cases, it may make sense to actually defer a little bit and wait longer if we see interest rates drop from here. So again, good question to kind of dig into on a one-on-one basis. Question 2. How do I access my 401k between jobs if I'm under 55 and get let go? Now, you've probably been on a lot of our webinars and seminars in the past. We talked a lot about the age 55 rule you have within a 401k plan. What that means is if you retire or leave the company the year you turn 55 or later, you can actually access that 401k without a 10% penalty. Generally speaking, if you tap into accounts, retirement accounts before 59 and a half, you're going to pay taxes plus a 10% penalty. So in this case, if somebody is under 55 and they aren't turning 55 this year and they're let go or they decide to leave, then you're not going to have that 10% penalty avoidance within that 401k plan. There are some options around that. The number one option would be what's called a 72T, where you would actually roll the money over to an IRA, set up a 72T, which is substantial and equal periodic payments. You have to agree to an IRS term of that for either 5 years or 59 and a half, whichever is longer. So in the case of somebody that's under 55, likely it's going to be till 59 and a half. So let's say they're 54. So for 5.5 years, you have to take out a certain amount every year for those next 5.5 years. And it's not something that the retirement group or yourself can set. It's based upon IRS calculations. Those have gotten better the last couple of years, so it's a little bit easier. We've done this countless times with Chevron employees and other employees. So go ahead and reach out to us if you're looking to go through this process, because if you do make a mistake on there, they can actually retroactively penalize you and hit you with that 10% penalty on past withdrawals if you make a mistake there. Another issue may be in this case, if somebody's looking to change jobs or they're looking at potentially changing jobs and getting something else, it may be that if you don't have a loan in your account, maybe you could take a loan out right now and have that as like a bridge, and you have some time to kind of start making payments of that after you separate. That could be another option. But again, everybody's kind of unique, so give us a call. We can kind of go through this with you one-on-one, let you know what some of those options are. But generally speaking, it would be to potentially take a loan from the 401k plan or do what's called a 72T, and we can get into those on a one-on-one basis. Let's see, question 3. How can I reduce my tax? How can I reduce taxes on my severance? So again, if you have raised your hand and you're getting tapped on the shoulder and you're getting let go, chances are you're getting a severance as well. And for some of you, it may be a year's worth of pay. So if you're, let's say, going in the summertime, you might be getting a year and a half a salary essentially. So a little bit more than what you're used to seeing. And then also in some cases, depending upon your level in the company, you may have some non-qualified distributions coming out as well, which may bump you up into an even higher tax bracket. So a lot of the questions we get are, okay, I've got this big year that's bigger than I've ever had. It may be 1.5, 2, 3 times what I'm used to getting. So I'm going to go into a higher tax bracket. How do I rectify that? There's a couple ways to do it, but I would say generally speaking, one of the best ways is going to be if you're charitably inclined. And this option where you can actually set up a donor advised fund, where if you're saying, okay, Wesley, maybe typically I make contributions of 5,000 a year, give or take, or 10,000 a year, give or take, to different charities or church, whatever it may be. You can say, okay, well, let me set up a donor advised fund and let me front load that with multiple years of contributions or charitable contributions. So maybe you're going to do 10 years worth at 10,000. So you can put $100,000 into that, get that one-time tax deduction in this year when you have a higher income, and then you have that set aside so you can actually give those donations to the charity year by year, and it can actually grow as well. And you can leave that to beneficiaries to pass on as well. The ultimate goal, though, is it has to go to a 501c3 charity eventually. Whether you make those elections or your beneficiaries make those elections in the future. Another way, if you're like that previous question, maybe somebody's between jobs, maybe they decide to go out and contract or do something else, and they become self-employed. You can look at some different self-employed 401k, SEP options, things like that, pension options of your own, where you can actually get a lot of money put aside, tax deferred as well, so you can take that out potentially if you are looking at starting a business. It could also be, with Chevron, you're in the oil and gas industry. If you've got some additional funds you're looking to invest in oil and gas exploration funds, there's some options where you can actually get tax write-offs for that as well. But that's typically for accredited investors. So again, it's something to be very cautious about and understand that. But if you are running through this situation, which a lot of you are, just let us know. We can kind of run through and help you determine and see how it fits best in your overall financial situation with a cash flow analysis. One more question. Again, like I said, these are some of the ones we're getting, not all of them. What happens if interest rates drop significantly in the future? Should I delay my retirement to take advantage of a potential increase in my lump sum? So this, a lot of people kind of understand. We've kind of beaten it to death that there's a seesaw pattern between interest rates and the lump sum. Again, for a quick refresher, the Chevron pension plan, if you were hired before 2008, was a classic defined benefit plan. In which case, there's a formula that generates a single life annuity for the rest of your life. From there, you can deviate if you want to do a joint survivor or period certain, or if you want to take a lump sum, you can convert that to a one-time lump sum where you get that and you in turn work with a retirement group or somebody else or yourself and invest that and try to recreate that pension if you would. What's going to happen though is they use interest rates to do a net present value calculation. So as interest rates change, so does the lump sum. And when interest rates are lower, you get a higher lump sum. When interest rates are higher, you get a lower lump sum. So we saw during the pandemic, interest rates drop dramatically. So we saw some of the higher lump sums we've ever seen. We saw the pendulum swing the other direction where interest rates moved up quite a bit. They came back down. Now they're kind of moving back up again. They're kind of leveling at this point. We've just got the rates come out for March last week, and they've kind of leveled off a bit. So again, we got those rates through May. If you have questions on that or need to get those rates, let us know. We can run that pension calculation for you. But in this case, let's say if somebody had a crystal ball and for some reason they knew that interest rates were dropping, and so the question may be, should I delay? So it could be two aspects. Should you delay retirement or should you delay commencing your benefits? You may or may not have a choice on your own for the retirement, given everything going on right now. But obviously, if you can, if you want to keep working, and you're looking at growing that pension from additional years of service, you're making money for an additional year or two if that's what you're pushing out, and if those interest rates are going down, it could be increase your lump sum. So that's threefold. You're good benefiting there. If you're somebody that did take EOI and you are leaving regardless, that means you could still defer your benefits if you want, commencing those if you think interest rates are going down. We can monitor this for you on a month by month basis, let you know how it's dropping or what the changes are, and show you how that's affecting you. So again, there are some options to do this, but it is a double-edged sword. If interest rates go the other direction, then obviously it's going to reduce that lump sum. And there's also the opportunity cost of what you otherwise would be doing with that. Could be good or bad, depending upon your investment strategy. So again, those are some of the different questions we've been getting. Like I said, a lot more have come through us, and we're used to going through everything with Chevron employees. Myself, Tyson, Patrick, some other advisors here have been working over 10 years with Chevron employees, so we understand the process, and we'll be happy to answer your questions. But ultimately, the best way to kind of review all this is not in a vacuum. It's not just a, hey, should I take the offer? What's this money look like? It's how does it play into my overall financial plan? So if you can spend about 10 minutes with us gathering some data, we can give us a couple of days to put together a detailed financial plan for you and let you show how this plays out, not just now, but the next 20, 30, 40 years even, to help you determine the best options on those questions. Should I take the lump sum? Should I take the annuity? Um, should I raise my hand or not? And so what those different options may be. But right now, about three-fourths of Americans over 50 don't have a plan. Again, like I said, if you just spend 10 minutes with us, we can get that plan put together for you, let you know exactly where you stand and help you financially, which in turn can help you make that emotional decision as to whether or not it's time to go. And with that, to kind of wrap it up here, but a quick reminder who the retirement group is. I know a lot of you have talked with us in the past, and it's been years that we've worked with Chevron employees. But we are an investment advisory firm that focuses on Fortune 500 companies, helping them transition their employees into retirement. We've got a deep understanding of your benefits plans, whether it be the pension, the 401k, healthcare retiree medical benefits, life insurance continuation, executive comp plans. We'll be happy to go through all those with you. We have offices throughout the country. Actually, just recently last year, the retirement group, we merged with Wealth Enhancement Group, a much bigger registered investment advisory firm. I got a little bit over $100 billion under management, over 100 offices across the nation. So rest assured, we've got somebody available for you. But obviously, if you want to, do things, if you're okay not doing things face to face, you want to do things via web meetings, phone calls, email communication, we can definitely do that. And we have clients scattered all across America taking us up on that. And at the end of the day, take us up on that cash flow analysis. If you haven't done one before, definitely reach out to us. If you've done one, it's been over a year, reach out to us again because obviously some things have changed both on interest rates and the market over this last year. So it's be good to get an update on that. So with that, I'm gonna kind of wrap this up. I'll let everybody kind of get back to their day, but I'll keep these QR codes up here for a while. So if you do want to schedule a meeting with myself or one of the other Chevron Focus advisors, there's one to get into our scheduling system. I think a lot of times we have that set a week out. So if you need something sooner, which a lot of you do, just give me a call or give us a call and we can get you set up with that. There's also one for our LinkedIn page. If you want to get in there and follow along updates on any items we put there, updates on new webinars and stuff and seminars that we have coming up as well. And then always you can email us at info@theretirementgroup.com or call us at 800-900-5867. And with that, I'll let everybody get back. But a quick reminder, even though myself and some of the advisors here have worked extensively with Chevron for many years, that does not mean we're employed or endorsed by them. But rest assured, any questions you have about this process, since we've been through it multiple times, we'll be happy to dig into, help you understand what those options are, and make sure you make the best decision for yourself and your family. Thank you, and we hope you have a great day.